You just don't get it, do you? You don't.
Every time the stock market drops, boom, headlines light up with $100 million wiped off of the market, or even $100 billion. Sounds terrifying, right? But here's the question that no one really answers. Where did that money actually go? Did somebody steal it? Did it just vanish into thin air? Did Wall Street swallow it whole? Well, in this video, we're going to talk about what happens when the market crashes. And for you, if you have a portfolio or an investment account, it feels very, very real.
Didn't work, huh?
Not quite.
But the answer might actually surprise you. Well, let's break it down. And yes, we're going to talk about fizzy drinks as a way to simplify the explanation. Imagine instead of stocks, the market is made up of these fizzy drinks, which are really good actually. Let's say there's 1 million bottles of this on the market, and each one is priced at $1.
I'd buy that for $1.
So that makes the fizzy drink market a $1 million market. Now imagine these are in the grocery store. These ones specifically are in Costco. You should check them out if you go to Costco. But imagine these are in the store and one of the stores actually marks the price down to 75 cents. And all the other stores that carry these drinks need to price match to stay competitive, so they also mark it down to 75 cents.
Well, that's a start, you know.
So all of a sudden, the market for these fizzy drinks, instead of being $1 million, is only $750,000. It's like $250,000, $250,000 just vanished into thin air.
Really?
And just like that, $250,000 of value just disappears.
Is that my paper?
Bad news, my friend.
What news?
Zentrax.
Oh, come on, it's down again.
2.5 points.
But did anybody actually lose $250,000? No, not really, because that value never actually really existed.
Right.
It was just hope. It was assumed that somebody would pay $1 for these until that other store marked them down to 75 cents, of course. But nothing actually happens until somebody decides to sell. And that's exactly what happens in the stock market.
Look, I'm going to Vermont. I don't want to think about this. I'm selling.
So when stocks actually go down, no vault of money explodes. Nobody's physically burning $100 bills, though it feels like your account's burning up, right? All that's happening is this. The price tag on each stock, the ask, has just changed.
Right.
A share that yesterday was worth $100 might only be worth $75 today. But unless you sell it today, you haven't actually lost anything, which is why a lot of investors and traders hold on to that stock that keeps going down and down and down because they hope it'll come back someday.
I'm keeping it. I'm going down with the ship.
That's not really a good habit to get into. You could be in the hole for years, if not forever. Some stocks never rebound. But technically, the money never really existed in the first place, even though you spent it acquiring the stock.
Come on, we're in it together.
All right, 2,500.
That's
It's like this fizzy drink on the shelf. It's only really worth what someone's willing to pay for it today.
Really?
If nobody's buying, it's just a sticker, not real money. Value in the market basically equals hope.
Wilkinson's got a bite on a new one.
Okay, so here's the next question. Like, where does the money actually go, though? If people are selling stocks and the value lowers and disappears, like, where does the value go? Well, the truth is, it doesn't just, like, vanish. It actually moves. It rotates. When investors lose confidence in certain areas, like high-growth stocks, for example, Palantir, NVIDIA, those will probably sell off when the market does actually pretty hard. And when that happens, investors will actually shift where the money goes.
Wall Street had swallowed me up and shit me right back out again.
For example, defensive sectors like healthcare stocks, which have been pummeled lately. Consumer staples, you know, the boring stuff. They could go to bonds, U.S. Treasuries, for example, which have a lower risk but a lower return. Gold and commodities seen as safe havens. And even cash. Some people just like to have the cash sitting in their account so they could pounce on the opportunity when everybody else is selling it. They might get their stock for a much lower price.
I just got fluctuated out of $4,000.
The money could even rotate into other countries' markets. So when you hear $100 billion wiped out, or let's say Tesla's stock plummets and Elon Musk lost $30 billion today.
I don't even think you really know what a bad day is.
Not really, because he still owns the same amount of company shares. It's just the value of those. As if he were to sell them all. If he did, because he owns so many, he would literally crash the stock himself. But basically, when you hear that the market lost $100 billion today, the money is just rotated elsewhere, even though your account doesn't look good and you probably feel like crap. But the money's technically not lost in general. It's just like wearing different clothes. Now, if everybody sells at once, see, that's where things get really messy and very interesting. Because mass selling causes prices to crash. That's actually when losses become real, not just on paper. It happened in 2020, it happened in 2008, it happened in 1987. Of course, it happened in 1929. That's panic. And panic is emotional. Panic is not logical. But the market is driven by human emotion, so these panics do occur from time to time, unfortunately. But most of the time, the day-to-day fluctuations in the market are just minor repricing of expectations.
6 points? It's up 6 points.
This bottle of fizzy drink, for example, was never guaranteed to be worth $1. Though I think it's worth $1. And that hot tech stock, never guaranteed to be worth $300 a share. Prices are just guesses, and sometimes we guess wrong. So the next time you hear that billions have been lost in the market, just remember, that money didn't just go in some black hole and vanish. It didn't vaporize. It moved. It simply rotated. Unless people panicked, and then everybody's poor.